Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Now let's take a closer look at how investors can approach these opportunities in 2026, covering risks, strategies, and what to watch for in the evolving landscape. Consider these expanding real estate sectors. Data centers. The digital economy relies heavily on data. Data centers, which house critical computing infrastructure, are in high demand. This makes them a strong investment. Logistics warehouses. E-commerce growth drives the need for more efficient supply chains. Large warehouses and distribution centers are essential for this. Healthcare facilities. An aging global population increases the need for medical offices, hospitals, and specialized care centers. These properties offer stable, long-term tenancy. Sustainable infrastructure projects. This includes properties that support renewable energy or eco-friendly urban development. They align with environmental preferences. These specialized real estate areas often benefit from long-term leases and stable income. They also respond to structural economic shifts rather than just market cycles. Infrastructure, the backbone of future economies. Infrastructure investments are known for their stable, long-term returns. These are essential assets that support society and the economy. Think of them as the foundational elements of modern life. They often involve long-term contracts and provide predictable cash flows. Important areas within infrastructure investing include renewable energy projects. Investments in solar farms, wind power, and hydroelectric plants are growing. The global push for clean energy fuels this sector. Digital infrastructure. This includes fiber optic networks, 5G towers, and satellite communication systems. They are vital for our connected world. Transportation upgrades. Modernizing roads, bridges, ports, and public transit systems is crucial. These projects support economic activity and growth. Infrastructure assets often have a degree of inflation protection. Their revenues are frequently tied to inflation or benefit from long-term, regulated income streams. This makes them a compelling option for investors seeking stability and consistent returns. Navigating the private markets, challenges and opportunities for investors. Investing in private markets can feel like exploring a new frontier. These markets hold significant promise, yet they also present unique hurdles that traditional public market investors might not be familiar with. We're going to explore what makes private investments so compelling, as well as the important considerations you need to keep in mind to succeed in this space. It is a world where patience and careful evaluation often lead to the most rewarding journeys. Increased accessibility, democratization of private investments. The ability to invest in private markets used to be exclusive to large institutions. Not anymore. Thanks to advancements in technology and the emergence of new investment platforms, these opportunities are becoming available to a much wider audience. We are seeing a significant shift toward the democratization of private investments. This means high net worth individuals and even accredited retail investors now have pathways to access asset classes once out of reach. Several key developments are driving this change. Online investment platforms. Many platforms now aggregate private investment opportunities. They connect investors directly with fund managers or specific deals. Feeder funds. These funds pool money from many investors. They then invest that capital into larger private equity, venture capital, or real estate funds. This lowers the minimum investment needed for individual participation. Tokenization. This involves converting the ownership of an asset into a digital token on a blockchain. Tokenization has the potential to fractionalize illiquid assets. This makes them more divisible and potentially easier to trade, thus opening up access to smaller investors. These innovations are breaking down traditional barriers. They are making it possible for more people to diversify their portfolios with alternative assets. Understanding risk and liquidity, essential considerations. Private market investments promise attractive returns, but they come with their own set of considerations, primarily centered around risk and liquidity. Unlike public stocks or bonds, private assets are not easily bought or sold. This creates higher liquidity risk. If you invest in a private company or real estate fund, you might need to commit your capital for several years. You cannot simply sell it off tomorrow if your financial needs change. Thorough due diligence is also critical. Since information can be less transparent than in public markets, investors must dig deep. They need to understand the underlying assets, the management team, and the investment strategy. This often requires specialized expertise. It is not always as simple as glancing at a company's public financial statements. When considering private markets, remember these points. Long-term horizon. These investments are designed for long holding periods. Be prepared to lock up your capital for 5, 7, or even 10 years. Specific risks. Each private asset class has unique risks. Private equity involves business risk. Real estate has property-specific risks. Private debt carries credit risk. Understand these before committing. Limited information. Expect less frequent reporting and fewer public disclosures compared to listed companies. You rely more on your fund manager's transparency and reporting. Because of these factors, private investments are generally more suitable for investors who have a stable financial position. They should also possess capital they do not expect to need access to quickly. The role of ESG in alternative assets. Environmental, social, and governance (ESG) factors are increasingly shaping the investment landscape across all markets, and private markets are no exception. Investors are not just looking at financial returns. They are also considering the broader impact of their investments. This means looking at how companies address climate change, treat their employees, and maintain ethical leadership. Fund managers in the alternative asset space are actively integrating ESG criteria into their investment processes. They are analyzing companies not only for their balance sheets but also for their sustainability practices, labor policies, and governance structures. This shift is driven by several factors. Investor demand. Many limited partners are requesting or even requiring ESG integration. This aligns with their own sustainability goals and values. Risk management. Strong ESG practices can signal better long-term operational resilience. Companies with good environmental policies might face fewer regulatory fines. Those with strong social programs might attract better talent. Value creation. Investing in companies that are leaders in ESG can lead to better performance. They might have lower operating costs, stronger brand reputations, and easier access to capital. This growing focus on ESG also opens up opportunities for impact investing within alternative assets. Impact investments aim to generate both financial returns and positive, measurable social or environmental impact. Think of private equity funds investing in renewable energy projects or venture capital backing companies developing sustainable agricultural technologies. These investments allow investors to align their capital with their values. They contribute to a better world while still pursuing financial growth. Alternative assets and private markets are becoming central to modern investment strategies. They offer powerful ways to diversify portfolios, boost returns, and tap into new growth areas like AI, sustainable technologies, and digital infrastructure. As these markets become more open, they present unique opportunities for smart investors willing to commit for the long term and understand the specific risks involved. The shift towards these assets shows a clear evolution in how wealth is grown and managed globally. As new technologies and accessible platforms emerge, alternative investments will play an even bigger role in shaping financial futures. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.